Okay, last class we went through average cost FIFO, and we were talking about inventory costing methods. And the last method that we're going to talk about is LIFO. So with LIFO, it's a directional method, just like FIFO is, and it's the opposite of FIFO. So FIFO stands for first in, first out for costing cost of goods sold. LIFO stands for last in, first out for costing cost of goods sold. So LIFO assumes that the newest items purchased are the ones that are expensed first. So we're going to draw a chart again with the date, number of units, the cost per unit, and then our total cost, just like we had for FIFO cost of goods sold and then FIFO ending inventory. So you're going to want to draw two of those. I'll give you a second to do that. As you're writing that out, I'll just remind everyone that under each of those methods, we're always going to expense the same number of units. So we're always going to have the same number of units as cost of goods sold. So number of units expensed is cost of goods sold. And we're always going to have the same number of units in ending inventory under the four methods that we have. But the value that we're going to calculate for cost of goods sold, the value that we're going to calculate for ending inventory is going to differ depending on the method used. So for LIFO, cost of goods sold, which direction are we going to start and what layer of inventory are we going to start with to expense?
March 23rd.
March 23rd, the newest items. So we're going to start from the bottom and work our way up. So LIFO, cost of goods sold. Did we sell at least 36 units?
Yes.
Yes.
Yes, we sold a total of 318. So we're going to expense all of March 23rd's purchased. 36 units. We paid $21 per unit. And the total cost of that layer, $756, is going to be expensed. So we can put a little check mark there. Once it's expensed, we know that it's gone. It's not going to be included in ending inventory. For the next layer up, because we go exactly layer by layer, March 17th, we purchased 165 units. Did we sell at least 165 more units?
Yes.
Yes, because we sold a total of 318. So we are certainly under that. So 165 units at $20 per unit. So that entire layer, that $3,300 is going to be expensed under LIFO. We'll take a little pause here and just kind of check. So I'm not going to include this. I'm going to erase it after I do it. But how many units have we expensed at this point? What's 36 plus 165?
201.
201 units.
Yes.
So are we definitely under 318 at this point? Can we have another 95 units to expense?
Yes.
Yeah.
So I'm just going to erase that. And we're going to expense the March 3rd layer. 95 units at a cost of $18 per unit. So 1710 is fully expensed under LIFO. Now we're dipping into beginning inventory, which is something that most companies using LIFO don't want to do because it's referred to as LIFO liquidation. Their cost of goods sold would actually decrease a lot when they have a substantial difference between their beginning inventory value or cost basis and then their newest inventory. Did we sell all 75 units?
No.
No. So at this point in time, how many units have we expensed?
22.
Sorry, how many units have we expensed at this point? So what's the sum of this?
296.
296. So we have 318 units that we need to expense minus 296 units, which we have expensed at this point. So how many additional units do we need?
22.
The 22? So 22 units are going to be expensed. And what are we left over with?
53 units.
53 units. So beginning inventory, this last layer, 22 units are going to be expensed at a cost of $16 per unit. And how much is this layer going to be?
352.
352. Now, as a check, how many total units did we expense? What's the sum of these for?
318.
318 units sold, so we know that's correct. We're only expensing the number we sold. And what's the value of LIFO's cost of goods sold?
6,118.
6,118. And what do we know about LIFO's cost of goods sold in inflationary periods of time compared to the other methods?
It's the highest.
It's going to be the highest. So 6,118 is what we calculated for LIFO's cost of goods sold compared to average cost of goods sold of 5,972. And FIFO coming in at the lowest, 5,870. So we know that we roughly have it correct. For ending inventory, this is pretty easy at this point, right?
Yep.
LIFO ending inventory is what's left over, and you always start with the oldest inventory. And in this case, we only have one layer. So LIFO ending inventory. You're going to have one layer, beginning inventory. And 53 units are left over from beginning inventory at a cost of $16 per unit. So what is LIFO's ending inventory balance?
848.
$848, correct. So once you learn FIFO, is LIFO pretty easy?
Yeah.
It's just a directionality difference. That's all it is. Calculations are roughly the same. Now, we're going to practice this. So let me attach, I'm going to pause the recording here. Okay, I will start with the specific unit cost. But we're doing that. What do we need to figure out? What didn't they give you?
Number of units sold, the number of units left over.
So they didn't give us the number of units in ending inventory. That's correct. What else didn't they give you? Christian got it. Yachty got it. So total costs. So before I even start with any of the method, I'm just going to calculate the total cost column. And how do you figure out that extended cost or that total cost?
Multiply the cost per unit.
Multiply the cost unit for the total units.
Yeah, so the cost per unit times the number of units for each layer. So A and B. So for beginning inventory, $30 per unit times 600 units gives you a total cost of
18,000.
$18,000. For March 6th, $32 per unit times 1,400 units,
44,800.
$44,800. Oof, these numbers. For June 1st, $34 per unit times 1,000 units,
34,000.
$34,000. And then the last layer is November 30th. November 30th, the cost per unit was $36 and 500 units were purchased.
18,000.
18,000. So the total cost when I add this up, cost of goods available,
114,800.
114,800.
800.
And the number of units available is
3,500.
3,500.
On my picture giving my friend presents.
Okay, so the second set of information that they did not give us was the number of units on hand, right? So they told us assume Draper sold 25 units during the year. 2,500, sorry.
2,500.
So we're going to take number of units available. So 3,500 units were available this year. They sold 2,500 units. Am I adding, subtracting, dividing, multiplying? What am I doing with this information?
Subtracting.
We're going to subtract out those that were sold to back into the number of units
Left.
in ending
Wow.
inventory.
Inventory. Yes.
So 1,000 units are on hand at year end that we have left to sell next year.
That's correct.
Okay, for specific unit cost, that's what I'm going to start with because I didn't go over it last class. For specific unit cost, they have to tell you either the specific units that were sold or the specific units that were left over in ending inventory. So they're going to identify those specific units from each layer and tell you which ones were either sold or not sold. And then by default, what's left over is what you're left with. What you didn't sell, they give you the number of units sold, or what you didn't still have left over in ending inventory. So the first part that they give us is assume that 200 units in ending inventory were from the November 30th purchase. So they're giving us not the units sold, but they're giving us the units in ending inventory. So in ending inventory from the November 30th purchase, 200 of those units were not sold. They're sitting and still available. So what does that mean? 200 in ending inventory.
200 times 36. So total cost is,
Wait 1 second, I'm not there yet.
oh, okay.
200 are in ending inventory. So where's the rest of those?
Yeah.
Those were sold.
300 were sold.
Yes.
So 200 units from this layer at $36, the cost per unit. And the total cost for this layer is
7,200.
7,200. For the rest of it, the remainder was from the June 1st purchase. How many total units do we need in ending inventory?
1,000.
1,000 units
Uh-huh.
in ending inventory. So June 1st is the other layer that these units came from. And from that June 1st layer, how many units do we need and how many units were sold?
800 were left over and 200 were sold.
So 800 in ending inventory, 200 were sold.
I'm glad that you're back today, Maria. We missed you yesterday.
Everybody mute, please. So 800 units times $34 per unit gives us a cost of
$27,200.
27,200. And we're going to add up these two amounts to calculate specific unit costs ending inventory.
34,400.
34,400. Now, one way that you could back into cost of goods sold is you could just take cost of goods available of 114,800 minus the ending inventory balance of 34,400. That is one way. But if you wanted to identify which ones are specific left over and to double check your work, you can list it out here. So whatever is not identified is assumed to be sold in this case. So it doesn't matter the order that you go in, but I'm just going to go with the one that's weren't affected first. So beginning inventory, they had 600 units in beginning inventory at a cost of $30 per unit. That entire layer was assumed sold because it's not sitting in ending inventory. March 6th, had 1,400 units in inventory at a cost of $32 per unit. Also assumes sold 44,800 because they didn't identify any in that layer. June 1st, 200 units of June 1st are left over and sold at $34 per unit as a cost basis. So when you multiply 200 units times $34 per unit, what's the amount that we're expensing for this layer?
6,800.
6,800. From the November 30th layer, 300 were sold and only 200 were left over. So the 300 sold are what we were expensing here. $300 units at $36 per unit. And the cost that you're expensing here for this layer is how much?
10,800.
10,800. When we add up these, the specific unit method calculates what amount of cost of goods sold.
80,400.
80,400. And let's make sure that we expense the correct number of units, the number of units that were sold. When you add up 600 plus 1,400 plus 200 plus 300, it does come out to 2,500 units sold, which is what we need to calculate too. Additionally, if you want to just double check your work, when you add the 80,400 to the 34,400, it equals 114,800.
Can you explain really quick how you got the 800 from the June 1st?
Yeah. So for June 1st, they told us that 200 of the units in ending inventory were from November 30th. So we expensed that. I'm sorry, we included that in ending inventory.
Got it.
And then it says the remainder was from June 1st.
Gotcha. Okay.
So we backed into it. A lot of this chapter is going to be backing into information. Okay. Which one do you want to do next?
FIFO.
FIFO? Questions on specific unit cost. Does it make more sense now?
Yeah.
Okay.
But this method is rarely used, right? And
Yes. This method is rarely used except for certain specific companies that have more high-end inventory,
okay.
smaller quantities of inventory, because it is a pain to do that.
That one was pretty difficult on the homework.
Yes, and it's because you're not, I don't think that the textbook explains it all that well.
Yeah.
So it's just looking at what they give you and then figuring out that you still are expensing the same number of units and you're still going to have the same number of units in ending inventory, and just reminding yourself of that information. It should be easier now.
Yeah, definitely.
Good. Okay, for FIFO, and I'm just going to erase some information.
Why is it called specific units?
Honestly, I have no idea. It's because I think you specifically identify the units that are sold or specifically identify the units that aren't sold. That's all. For
Sorry, can you please repeat that again?
it's because you're
I didn't hear you.
specifically identifying specific units that are either sold or not sold.
Yeah, probably because the inventory that you purchase at changes a lot. The prices change a lot.
Yeah, the prices change a lot, and the inventory that you probably are purchasing when you're using this method are going to have way different cost points.
Yeah.
So it's things like real estate where every single house, every single plot of land, building, whatever it is that a company is selling has a different cost basis. So that's why.
Okay, thank you.
It's a huge reason why Costco is not using this. There's no way they could do it. So for FIFO, first in, first out. For costing cost of goods sold, we're going to start with cost of goods sold with the rest of the methods. So we're going to start from the top and work our way backwards, right?
Yes.
So did we sell at least 600 units?
Yes.
Yes.
Yes. So beginning inventory is going to be expense, 600 units in beginning inventory at a cost of $30 per unit. 18,000 is expense. We are way under our 2,500 units at this point in time. So when I go to March 6th, I know that I sold an additional 1,400 units. So March 6th, 1,400 units are going to be expensed at a cost of $32.
44,800.
Yep, and all 44,800 will be expensed. Now, I'm just going to do a little calculation here. And right now we've accounted for 2,000 units. So how many additional units do we
500.
500. Can I just jump down to the November 30th layer that has 500 units? Because I have seen that tried.
No.
No, because I need to go in order. So I'm going to take
For June 1st.
500 from June 1st and assume it's sold. And that means that 500 from June 1st are in ending inventory. I'm breaking up that June 1st layer. So June 1st, 500 units at $34 per unit are going to be expensed $17,000. If I did the math correctly.
Yes.
So right here, I know I have 2,500 units sold. And FIFO's cost of goods sold is going to equal what?
79,800.
Yep, $79,800. Questions on FIFO's cost of goods sold? Once you do FIFO and LIFO a few times, you start feeling confident and it's a lot quicker for you. What are we left over with ending inventory for FIFO? The new
All of November 30th and half of the June 1st.
Yep. So we're going to go the opposite direction. The newest purchases are left over. So November 30th. Sorry. You purchased a total of 500 units at $36 per unit, and you're going to have $18,000 from that layer sitting in ending inventory. For June 1st, we still have 500 units left over from June 1st that we didn't sell at $34 per unit. So $17,000 is sitting in ending inventory for June 1st purchase. 1,000 units in ending inventory, which we calculated above, total value of ending inventory for FIFO is what?
35,000.
35,000. Sorry. When you add up that 79,800 and 35,000, it's going to equal 114,800. It's a check that we're breaking up all of that cost of goods available between the two. Questions on that?
Professor Wade, about on the June 1st
Mhm.
of the number of units, the 500, I don't know, but I supposed to have the leftover 300 because I supposed to use the 500 and just have the 300 left. Why it is 500?
Okay. The 300 that you're looking at is from the specific unit method.
Mm-hmm.
So we don't care about specific unit. For FIFO, it's a completely different method. So I don't care that specific unit had 300 units left over from that layer. For FIFO, specifically, you only expensed 500 units from that layer here. So you still have 500 units left over in ending inventory for FIFO. If you're using FIFO, you don't use specific unit method. You're not using the specific identification method at all. You wouldn't have that. Those 300 units that were left over were specifically for specific identification.
But at the beginning, I have 1,000 units, right?
Yeah, you
At the
still have
beginning,
1,000
so
units.
I take out 200, so my last remaining it was 800, right?
For
And
specific identification.
100, I take out the 500 units for the FIFO. So that's what I confused because for me, it's only 300, not 500.
Beatrice, if you look up here, 200 from November 30th and the 300 from November 30th.
Uh-huh.
And this is specific identification or specific unit cost method. There's the 500 for that method. For FIFO, when I'm looking at November 30th, all 500 are left over for FIFO from November 30th. For June 1st, for FIFO specifically, 500 were expensed as cost of goods sold and 500 are sitting in ending inventory.
Okay, so do I need to take the same amount that I have for the 500, right?
Yeah, you ignore what you did for the previous method.
Okay, I got you. Thank you.
Yeah.
Yeah, even I was thinking the same thing. Now I get it. So for the same question, we're solving in 3 different ways.
4 different ways. So you have to cylinder, you have to, what is it? Put them in separate columns. They're completely separate. Based on the same set of information, if a company was using this method, they would have this. If they were using this method, they would have this. But what happens and how you break apart different layers for each method is completely separate.
Okay.
So you have to kind of reset it and erase information or rewrite it or recopy that data that they give you.
Okay, so but like if we're talking about only one company, then it's gonna be only one method.
Correct.
Or just for like practicing with all of them together.
It doesn't get confusing when you're looking at it at a company because you're doing one method and one method alone, and that's it.
Okay.
When you have 4 different methods that you're looking all at once, you have to keep that original data separate for each.
Okay.
So I'm going to erase the 500 here. I'm going to erase the check marks. And then with LIFO, cost of goods sold, where are we going to start?
November 30th.
November 30th. The newest purchases. So did we sell at least 500 units?
Yes.
Yes. So November 30th, 500 units sold, $36 per unit cost basis. And that entire layer of $18,000 is going to be expensed for LIFO cost of goods sold. For June 1st,
First,
did we sell at least 1,000 units?
yes.
Yes. So we sold at least 1,000 more units. June 1st, $34 per unit cost basis. So we're going to expense all $34,000 from that layer.
Mhm.
At this point in time, how many units have we accounted for?
1,000.
1,000.
So 1,500 units total. So how many additional units do we need from the next layer?
1,000.
1,000. So 1,000 units, and then of that layer, 400 are left in ending inventory.
Mhm.
So from March 6th, we're going to expense 1,000 units at $32 per unit. $32,000 is going to be expensed. 2,500 units were sold, and that's what we expensed. And for LIFO, cost of goods sold is what value?
84,000.
4,000.
84,000. So higher than FIFO, we would expect it to be higher than FIFO. It should be higher than FIFO.
Mhm.
For LIFO ending inventory, we're going to start with the oldest items in inventory because that's what's left over. All 600 units from beginning inventory are left over. At a low cost of $30 per unit. So 18,000 is sitting in ending
18,000.
inventory. We know that 400 of those units from March 6th were not sold,
Mhm.
which is the next oldest layer. $32 per unit for a total cost of what value?
12,800.
12,800.
12,800. 1,000 units are left over in ending inventory with a total value for LIFO ending inventory of what?
30,800.
$30,800, which should be lower than FIFO's ending inventory because FIFO's ending inventory is going to be the greatest value. It's based on the newest purchases. How did you do on those two? Good?
Good.
Mhm.
Are you going to ace this homework assignment? And the test problem, because you know this will be on the test? This can be a yes.
Yes.
You don't even. So,
I keep everything.
average, what was that?
If everything's organized.
Yes, that your notes need to be organized. Don't forget that. Okay. Average cost and double check your work, Prescott.
Yeah.
Average cost per unit. We first need to calculate the average cost, that weighted average cost per unit. And we're going to take our cost of goods available divided by the number of units available. Pretty much always assume that they're not going to give you cost of goods available. You have to calculate it. Pretty much always assume they're not going to give you total units available. You have to calculate that. So cost of goods available was the sum of beginning inventory plus the purchases. So 114,800. Divided by the total number of units available, what you had available to be sold during the period, not what you sold. 3,500 units are available. And what is my cost per unit, my average cost per unit?
32.80%.
Yeah, so $32.80 per unit is my average cost. So as soon as you see that 32.80 per unit, you know you're not done. You know you have some extra steps, because if you compare that to what you're calculating for cost of goods sold or for ending inventory, it's way off from the other methods. So after you calculate your average cost per unit for cost of goods sold, you're going to multiply it times the number of units sold. In this case, how many units were sold?
2,500.
2,500.
Yep, 2,500 units were sold. And if you look at every single method that we just did, we always had the same number of units sold. And our average cost was $32.80 per unit. How much did, what was that?
82,000.
$82,000. With average cost, you know that cost of goods sold as well as your ending inventory need to be between what you calculate for FIFO and LIFO. So FIFO had the lowest cost of goods sold with 79,800, and LIFO is higher with 84,000. So it's reasonable. It's just kind of a reasonableness check for you. It's a value between those two. For ending inventory, we're going to take the number of units in ending inventory. So 1,000 units in ending inventory times your average cost per unit, which is $32.80 per unit. So ending inventory, your balance for inventory is going to be 32,800 for average cost. Questions? Are you feeling a little bit more confident about this?
Yes.
Yes. Thank you. I'm going to pause the recording.